Good evening, hello and welcome to our special show, Bulls in Control. I'm Surbhi Upadhyay and with me is Ekta Batra. Over the next 30 minutes, we will discuss the markets and what's driving bulls on the Lal Street. Hi, Ekta.
Hi, Surbhi. Yes, absolutely. A little bit of consolidation today, but the mid-caps fought back. So we have a lot to talk about in the next 30 minutes. These are top stories as well as the big faces that we have lined up on the show for you. Lots of market opinion. We have Mahesh Nandurkar of CLSA, who says that while valuations are a concern, demand for equities appears to be sustainable on strong domestic inflows. Manishi Chaudhary of BNP Paribas Securities expects earnings growth in FY18 to be in the early teens. Rashesh Shah of Edelweiss talks about India's NPA problem. Also joining us live on the show to decode the markets is Basant Maheshwari, Portfolio Manager by Basant Maheshwari Wealth.
Okay, but before we get to all that analysis and the opinion, let's quickly see how the markets fared today. As Ekta mentioned, it was a lot of consolidation. The first day of the new series saw traders absolutely sitting on the fence, you would say. The Nifty managed to hold on to the 9,300 mark. The Sensex closed flat with just a 2-point uptick. Bank stocks actually underperformed slightly today. The Nifty Bank was down about 16 points towards the end. Mid-caps hit another high, however. That index managed to outperform, rising by about 0.5%. Anuj is standing by to decode the day's trade for us. Anuj?
Well, quite a volatile day for the market, but in the end, if you got good stocks, intraday you made a lot of money, and mid-cap index actually hit a new lifetime high. And what clearly stands out now is that housing is the theme, and that's working beautifully well for traders and investors. So all these stocks related to housing are surging. In fact, that was the theme of the day today. Indiabulls Housing was the top index winner, but Canfin Homes and LIC Housing, and these are not mid-cap names, these are decent large-cap names, all of them were surging. Some other index gainers today included HDFC, once again the housing theme playing out, ONGC, and Maruti, which has now hit a market cap of 2 lakh crores. Other nifty gainers included BPCL, Kotak, and Z Entertainment. But the market gains were capped because of Reliance. That was down about 1.5%. Tata Motors as well, by the way. And Cement was down today after Ambuja's numbers, so ACC was down a bit. Outside the index, some more F&O gainers today. DCB Bank, phenomenal run on that stock. L&T Finance Holdings and DHFL. And on the losing end, you had stocks like GSW Energy, OG1 and Bank of India. But all in all, good day for stock traders, especially if you were in anything related to housing.
Okay, thanks Anuj for that. Let's bring in our guest now. Basant Maheshwari, author and portfolio manager at Basant Maheshwari Wealth Advisors joins in. Hi Basant, thanks very much for joining in this evening. Well, it seems as though there's a little bit of consolidation which took place today for the markets, but as a whole, where do you see the trend move?
Hi, good to be with you again. I mean, if you look at the overall trend, 90% of fund managers like us spend 90% of our time deciphering the next 10% market move. I think the important thing right now is to see where the trend is, and the trend, as Anuj clearly mentioned, is in the housing space, so whether it's a home finance or anything related to housing. So there are several ways to play the housing boom, as there are several ways to reach heaven and to find God. So I think the one which works for you, just find that and cling on to it. One big problem with any bull market is, from an investor's perspective, is instead of trying to participate in the ongoing trend, they try and identify the next big trend. So I mean, the next big trend would be for the 5 years down the line when the next bull market comes along. But for the moment, I think we should just focus on what's happening in the market right now and what's paying us, and that's the way it should be. But my sense is this is not an integrated all-out bull run where all stocks will do well. I think the Nifty is going to underperform the broader markets because the Nifty is handicapped by Mr. Trump over there. So pharma goes, one of your favorite themes, and IT space goes off. So, so because of those things, so I think overall the trend is that you will make a lot of money buying the mid caps. I'm not doing a great favor by suggesting this cliche, but I think we should just be, and importantly, the classic thing about a bull market is if you got the right stock, then just try and get the right stomach to hold on to it, because bull markets don't finish off that well. Stocks will get expensive, then super expensive. So I think it's better to play the entire theme than try the next 10% move.
Basant, you pretty much sort of, brought up the next part of the conversation. So if the whole market is not going to do well, then it's all about picking the right themes. You mentioned that housing is something that you are also a little keen on. Anything else that sort of, seems to catch your fancy at this point?
I think consumer space should do well. Anything related to rural consumption would do well, because it's the middle class that brought Mr. Modi in, but now he's working for the rural class. So the 3G scheme of the government is the Gao, Garib and the Ghar. So I think anything related to semi-urban and rural India is again going to do well. You got the new pay commission coming in and consumption will come there. So that's one small theme there. So the problems will be with these kind of situations is, we always say this has gone up so much, let me find the next big theme. So that doesn't work. If the theme that's doing well is backed by fundamentals, I mean, just sit back, let the stock become expensive and be very sure of the earnings. Because earnings to a bull market is like, they are like petrol to a car. So you can't drive a car without petrol. So bull markets don't drive on liquidity itself. There has to be some earnings. So we might say that the market is going up because of liquidity, it's going up because of buying, but there are drivers to these things. So I think overall the concept should be to find out those 2, 3, 4 pockets of, activity and just stay on there.
You mentioned earnings. Are you happy with the season so far? I mean, we've got cement, which was slightly better than expectations. Auto, something like a Maruti, sort of, absolutely on dot with terms of the street expectations. But are you happy with the numbers you've seen so far?
As an investor, if the company delivers what we expect them to, it's just a case of being satisfied. So I don't think, if you look at just the earnings, you won't be able to think too much about the market. But ultimately, the price tells you that it wants to go higher. And it's not just an India-specific thing. You see, the US has now suddenly started to talk about a 4% GDP growth. So imagine a $13-14 trillion economy growing at 4%. That's $500 billion added every year. So we never had these kind of things. And US is on a roll since Mr. Trump came in. And everybody was writing the obituary for the US markets because of Mr. Trump. So I think if you look at it on that side, I think it's a globally integrated bull run. And that's happening across. So we are not going up in isolation. The entire thing is going up, but on an earnings back, you can't make a case for a big bull market basis of earnings, but we are completely invested and super bullish, and we intend to remain that way.
Well, one of the stocks that you like actually, Basant, is Avenue Supermarts or D-Mart. What's the rationale and any more to go in terms of an upside?
No, I mean, it's just started. So in terms of an upside, of course, it's not a recommendation. We own it for ourselves and for PMS clients as well. We bought it first day, first show. And the big thing about Avenue Supermart is, in its market cap range, this is the fastest growing company in India. So you can pay, I just give this example every time, 40p for a 12% Asian Paints, or you can pay a slight, very high P for a 35% growth with surety. So that is with Avenue. And the best thing about Avenue is whenever Avenue opens its stores, its competitors want to flee away. So you want a warrior in your portfolio. So the moment it goes and stands there, the competitors get driven out. So it's got the strategy right. It's got the Walmart strategy of moving in concentric circles. You save on logistics, you save on distribution, you save on, so many things, on advertising, on publicity, and it buys cheap, it sells cheap. So it's everyday lower prices rather than the 26 January sale and the 15 August sale, which Indians have been fond of for all these years. I can go on and on and on, but it's not cheap. So who says good things should always be available cheap? And in the stock market, as you know, you can't buy mangoes at the price of bananas. So mangoes are expensive, but if you like mangoes, you got to pay the price.
Well, speaking of expensive, I mean, since you like housing as a theme, how would you advise playing it now? Because if you look at housing stocks from your, Uptown to Kolte Patil to Indiabulls real estate, I mean, 80% to about 100% in the last 1 year. Equally, if you look at housing finance companies, I mean, they've also had this huge run. So how does one play housing?
No, we're playing housing only through the HFCs. And 2 stocks which we own, which is in public information, not a recommendation again, we offer ourselves and for clients, and we hold PNB Housing right from first day, first show in Canton for the last 2 years. So we are playing it, I read somewhere you need 203 different things to make a house. So you can buy companies that make up each of these 203 different things, which are the tile company, sanitary wastes company, or you can buy a washing machine because a house would need a washing machine, or you could buy a mattress company, or you can just go and say, I'll buy someone who finances all of you. So You can buy consumer durable company or you can buy the home finance company. So we are playing it through that route. And of course they're expensive, they're 4 times book, 3 times book, 5 times book. But the classic thing of a bull market stock is the earnings will have to be upgraded every time. So, and the classic thing of a bear market stock which is staring and coming down is the earnings are downgraded with every quarter. So with most of these housing finance companies, first they deliver on earnings, and secondly, the analysts go back to the Excel sheets and say, okay, we just underestimated. So for the next quarter, we expect 2% more, we expect 3% more. So as long as that's happening, I think the PEs get re-rated. So that's the way to play it, and there's several ways to play it, like I said, but we prefer playing it on the financial side, and they're growing at 30 and 40%. CanFin grows 30%, PNB should grow 40%, and PNB, according to me, is still the undiscovered kid on the block. It's not a kid anymore, looking at the market cap, but I think it should do well for us and for our clients. Not a recommendation.
Okay, fair enough. I get that.